waiting to buy the euro dollar somewhere in this zone here where I place the green spot. Okay, so I want to buy the euro, but it's not yet ready. So I'm just waiting for it to pull back in this zone. But if the euro dollar pull back into this zone, I will not buy straight away. All right, I will examine the price action in this zone before I will buy. Okay, so this is a good place to buy, but I will not buy straight away. I will examine, monitor, okay, the candlestick bar, monitor, okay, the price action around that zone. Okay, so I'm just waiting now for this to be fulfilled. Once I have a clear-cut indication that okay, other traders, the smart money, is buying in the zone, I will also join them. In fact, I will use a limit order, all right, to enter the trade. I want to explain to traders who are beginners what is a limit order. So, for instance, you can buy now, okay, at 100,666. This is what we call market order. So you are just buying straight away. That's what we call market order. There is another way you can buy. You can place order here to buy. The order will be filled only if the price reaches that level. So when the price comes to this zone, and I'm quite happy about what's going on, I will not buy with a market order. I will use a limit order to enter the trade. Now, the advantage of the limit order is that sometimes, suppose you want to buy here, okay, in this zone here, okay, if you buy straight away with a market order, you see that the price is going down, okay. Now, another strategy is to place order above here. Say, okay, I want to buy up here. So if it's going up, you are not the first person to buy, but they are buying into your order, okay. But if you want to apply that strategy, you want to use it, okay, with a top-down trading method, okay. So you apply, you see a valid trading setup, a signal is fired. Now you are in the entry time frame and you want to buy. Then you apply that method to use a limit order, okay, to control the risk, all right. So just waiting to enter this trade here. Now trader will ask me again, by the way, we are recording this video today because a TSTW24 trader, TST trader, has asked a question, excellent question, about how, okay, to exit the trade, how do we set a price target, how do we take profits. So you enter the trade, now how do you set your target, how do you take profits, all right, and also how do we set stop loss. So this video is to clarify to that trader, okay, how one can set a stop loss and how one can also set a profit target. All right. So this is a live recording. By the way, the time in London is 13 minutes past 11 a.m. In New York is 30 minutes past 6 a.m. All right. On the 18th of November 2015. All right. So for a live demonstration all the time, I will have to pause the video at some point because we don't want the video to be too long. All right, reasonable. I would prefer it to be under 40 minutes. Hopefully, fingers crossed. All right, because sometimes it may take longer than that. All right, so this is what I'm doing here. But I want to clarify a few things because it's good for traders to know why I want to buy. Okay, this is a very important question. So anytime you want to buy or sell, you must have a valid reason. So when you see yourself anytime buying anything because of the stochastic or the RSI or the CCI, you want to ask yourself, why am I buying? the valid reason, one of the valid reasons why people buy is because, okay, you have a valid, okay, trading setup. That's the bottom line. If the trading setup is valid, you are likely to have a valid signal. If you see a valid signal, but the trading setup is not solid, all right, it's not viable, that signal is risky. Sometimes trader will take it, but one should understand that there is more risk. The next thing, if we see a valid trading setup, okay, now you see a valid trading setup, you say, good, this is exactly what Josh has said. You see the signal. One more thing that you don't want to forget is the market environment. All right, I said this 100 times. Please do not get fed up with me. All right, the market environment. So now, as I show you the time in London, it's 11:15. Now, London is open. All right, it's now 3 hours gone. All right, so this is what we call the gap period. All right. It doesn't mean that trader cannot trade during a gap period, but the only thing is that it's not the best time for day trading. So we need to be aware of the market environment. Is it the best time for day trading or is it not? If it's not the best time for day trading and we decided, okay, we can do it sometimes, we decided to trade, we want to keep our eyes wide open and know that there is a risk here. So what I'm doing here is a little bit risky. I'm aware of it, and I will control it gently, all right? Okay? This is what we want traders to understand. The risk management, okay? The risk management, all right? Because sometimes traders can trade, but they don't pay attention or they don't give any consideration, and they don't give enough consideration to the risk control. Because I say once to a trader that okay, when you start hating to lose, you start making money. All right, so you want to hate to lose. So the first sign that a trader hates to lose is that trader become very defensive and start concentrating more time on the risk control. All right, so please pay attention to that. Okay, so now I'm saying that I want the price to come here. Will the price come here? It may not. If it comes, that's great, because that's the best place I want to buy. Somewhere in this zone, all right? Somewhere in this zone, okay? So I want to talk about why I'm buying the euro. There's something here on the 4-hour chart, okay? So I'm using here the 4-hour chart, okay, as my trading setup. So I will, though I'm using a 4-hour chart for my trading setup, I will use the weekly chart to validate this trading setup. Okay. Now there are many ways we can validate a trading setup. Okay. All right. So for this purpose, because I'm on the 4-hour chart, it's not quite higher time frame. I will use weekly chart to check whether everything aligned properly for this trading setup. All right, so let's move on. We don't want the video to be too long. So here we are. We see that the euro dollar is still in a declining channel. So there is a risk in this trade, as I told you. Why, in the name of God, I'm buying. I'm talking about a bullish trading setup when the price is still in a declining channel. Okay, very good question. Okay, I see the declining channel, so it's not a best trading setup. Okay, there's a kind of risk in this trade, but this triangle, you see the triangle on the 4-hour chart, this triangle, you see the price is going down. Okay, going down, you see it going down. Now you have this small triangle here. You see how the price pop up here. Now I don't want to dwell on it. All I will say to traders is to go to www.youtube.com/user/24 Elliott Wave. So I'm referring traders to 24 Elliott Waves YouTube channel. Share the videos, okay, about the ending diagonal. So I will not dwell on it too long. All right. So check videos about ending diagonal at 24 Elliott Wave, or you go to www.24 Elliott Wave check the fifth Elliott wave extension web page, and you know a little bit about the ending diagonal. The ending diagonal, okay, I don't want to talk about it because this is a correction taking place here, and I don't want to confuse traders. This is a correction taking place here, okay? The price is consolidating on the weekly chart. We talked about it before. You see here the market pattern on the weekly chart. Price is oscillating between this orange line and this one here. So when the price consolidating, or when we have a balanced market, we can look for an opportunity to sell at the top of the consolidation and look for an opportunity to buy at the lower part of the consolidation using a top-down trading method, okay? Now, because we on the weekly chart, we have a balanced market, traders are selling it down towards the lower part of the channel. But why am I deciding to buy? As I told traders before, watching this candle here, you see the tail of this candle here, we are the lower part of this candle here. It's a support zone, all right? See that the price dropped down with one candle here on the weekly chart and change the direction in that zone. And then we have the tail of this candle. Some market participant bought it here before. So this is a bullish zone. The price going down, though the ultimate target is the lower part of the balanced market. There is a support here. I want to give priority to bullish signal, okay, above 10670. You can see that the price now below it a little bit, 10666. All right. So because of this support here, the support at 10670, though it's still risky, you can see that on the weekly chart they are selling it down near towards this level. If I'm buying now, it's quite risky, but I know how to control it. So because of this support level, it's a support level, we don't want to ignore it, though the ultimate support is this one here. On the weekly chart, when we go to the weekly chart, what I'm doing here, I'm validating my trading setup, okay, on the weekly chart. I know there is a risk. We see a triangle. So please, okay, I'm not talking about area wave as such, but I'm just talking about a triangle. What I say to traders, whenever we see a triangle, we say to traders that we think that anything is possible. All right? So if the price is going down, and suddenly we see a triangle, we highlight the triangle. If the price out of the triangle, we can buy. This is what trader is here. You see how he ran fast? Boom, 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 up. So quickly, let me mention something. How do we set a target? So now for the trader, I don't want to mention your name. How do we set a target? So we use a pattern to set target for the profit. All right, so one example to set the target. So here you see the price came out of this triangle here. You see the blue triangle here. So on the forward chart. So if we apply a top-down trading method and then we enter the trade here, how do we set a triangle? We use okay, the height of the triangle here, and we project it here at the breakout point. So the conservative target is 10677. So trader will be expecting to take their profit somewhere in that zone. It does not mean that you will have to wait until the price reaches that level before you take your profit. You can decide, you can set yourself and say, for this trade, I want 50 pip. For this trade, I want 40 pip. For this trade, I want 30 pip. And if it's achieved, okay, you can secure it. Or if the price goes above, suppose you were expecting 30 pips or 40 pips out of the trade, and the price went up to 50 pips or 60 pips, you can secure your 40 pips by moving your stop loss. Okay, you can move your stop loss up. So you secure some of your profit. All right? Because the worst thing that traders can happen to a trader is to see a winning trade become a losing trade. It affects you. For me, if it happened to me like that, I just walk away. I go away. I know that I'm going to make more mistakes. I just go away. All right? So don't do that. So for a triangle, here we are. We can use the height of the triangle to set a target. But that's not the only way. The best way to set a target is on the signal time frame, okay? All right, on the signal time frame. Suppose, now I say suppose we are using the 4-hour chart here as a signal time frame, okay? And we buy at the support level here. If we want to take profit, the first profit target is the first and nearest resistance level. So looking at this chart, trader will say to me, if I buy here, where is the first and nearest resistance level? A lot of traders will say this zone here. Okay, a lot of traders will say this zone here. But I want you also to pay attention to the candlestick bar. Look at this candlestick bar here. Some traders, it went up here, but some traders sold it here. So apart from this first and nearest resistance level, which is correct, in fact, this level here, don't ignore this zone here. So for me, if I buy here and the price going up, I'm watching the reaction of the price as it's approaching this zone here. So my minimum target is this one here. By my conservative target, so you see the top of this candle, that's what I call minimum target. It's a resistance zone because some traders are on top here. So pay attention to the candlestick bar. So the point I want to make here, talking about profit taking, apart from the pattern that we use, okay, to set target, we can also pay attention to the price. So on this, especially on the signal time frame. Generally speaking, traders set their target on the signal time frame. All right. So you will look for resistance level on the signal time frame. Pay attention also to the trend line. So if you buy, for instance, okay, on the signal time frame, the price, okay, I don't want to move my line. I'm afraid that this video is going to be a bit long because this is an essential topic. So price pull back in a rising channel, and then you buy here, okay, and the price is going up, okay. Apart from other resistors that are horizontal, pay attention also to the trend line, the edge of the channel. It's a resistance level also. So if the price break above the horizontal channel, you are securing your gain. And as it comes near the edge of the channel, know that some traders will also take profit. So on the signal time frame, you buy in a rising channel, be aware of the edge of the channel. But the bottom line is that when we buy, we use a top-down trading method. So we see a trading setup, we receive the signal, and then we enter the trade. The signal time frame, the first and nearest resistance level, is our conservative target level. All right? But what you need to do, you should ask also the question, how much profit do I want out of this trade? Minimum. So say to you, what's the minimum profit would you like to get out of this trade? Okay? For some traders, they have a minimum target and they want to take that profit. 30 pips. They want to secure it because they have a target for a week. So they want to achieve 600 pips for a week. So they know that, okay, I must take minimum 30 pips each time at least in order to achieve that target. So have in your mind the minimum target that you want to achieve. Okay, so when above your target, you can secure it, but careful, you don't want to be taken out when you are moving your stop loss. Be aware of it. Okay, secure some of your profit so you don't give away your profit. But the general rules, signal time frame, we enter the trade. Okay, signal time frame, signal is fire. We went to enter the trade on the entry time frame, but for the target, check the first and nearest resistance level on the signal time frame. That's our target level. Doesn't mean that we have to close the trade there. We can move our stop loss up a bit to secure some of the gain and allow the price to continue to go up. As you can see here, the price exceeded the target for trader that bought it at the beginning here. It went above it a bit. Now, if it goes above, a little bit above the target, something else advanced traders are doing, they will apply Fibonacci extension to the price move. So it goes above the target. You see here, it goes. Let me remove this line here, okay? It goes above the target. This is for advanced traders. They will apply Fibonacci extension to the target's price move. So price went up from here to hit the target. This is the target. So the next target is at 138.2% Fibonacci extension level. Look at that. Look. 138.2%. That's when, after going above the target, look where it stopped. 138.2% level. This is a market stable data. For the bullish momentum to continue, if we break above the target, the challenge for the bullish progression is the 138.2% Fibonacci extension level. All right. See how it is up here, okay? This is what's going on now. So, general rule for profit taking, all right, is to set the target. Minimum target is the first and near resistance level. You follow that, you'll be all right. Apart from that, we use also patterns. So for a round button, so I talk about this also. Let's go over it because a lot of traders know this. But I need to talk about it because some traders don't know about it, so I need to mention this. Okay. You need to think of new traders also. Because sometimes traders mark video down because they say, I know this already, George, and you don't have to tell me, but we don't want to be selfish, okay? There are other traders who do not know this, okay? So let's not be selfish, okay? So for a round bottom, so price went down, turn around, round bottom, okay? We measure the depth of the round bottom and we project it. If it's the opposite, which means opposite, what do you mean by opposite, okay? Round top, we do exactly the same thing, all right? We measure the depth, and if it breaks down, we project it down. That's our conservative target. It does not mean that that's exactly where. So I'm talking to traders that, so the traders have different mindsets. Some traders think like a scientist, okay? You need to understand that you teach them something, they would want to do exactly like that. Be flexible. So for those traders, price does not have to hit the target. It doesn't have to. Sometimes it may change direction before that. Okay, so have a minimum target always in your mind and secure it, or at least secure part of it. If you don't want to secure all of it, secure at least 40% of your profit, the minimum profit that you want to take, okay? That's it. Also, we have also another one that we call the head and shoulder pattern, okay? So for the head and shoulder pattern, you will draw the neckline of the head and shoulder pattern, and you measure the distance from the neckline to the top, to the top of the head. So head and shoulder, left hand side shoulder, right hand side shoulder. You measure, okay, the height from the neckline to the top of the neck, to the top of the head. So we have the head somewhere here. You understand? Head and shoulder pattern. You measure from the neckline to the top of the head. That is your measurement. The measurement for the target. Right below, you set it there. Price does not have to hit the target. The opposite is also true for the inverted head and shoulder pattern. So, again, from the head all the way to the neckline, talking about the inverted head and shoulder pattern, and then, okay, if you break above, you set that target there. If the price exceeded the target, use the Fibonacci extension to set it. So you apply Fibonacci extension to the target and highlight the 138% Fibonacci extension level. That's it. That's clear. That's what's happened today. Okay. Let's see what's happening. I want to enter this trade now. Okay. Once again, if you have more questions, do not hesitate to contact us. Okay, and we'll get back to you. Okay. What's going on here? People are buying before me or what? All right, okay, my friend. I remove, that's it. You see the zone, how it touches here? But I'm not going to buy yet because that's the first move up, okay? I'm not missing anything. I'm just going to be very, very patient. So, what I did before, I was using Fibonacci. I need to tell you also. I was applying Fibonacci extension, okay? Fibonacci extension, Fibonacci. Now here, I was applying Fibonacci retracement. So, you see the price went out of the triangle, blah, 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 up. And I want to buy somewhere near the zone of 50%, which is this line here, between the 50% and the 61.8% Fibonacci retracement zone. That's why I put it here. Want to buy somewhere in that zone. If they allow me to do that, doesn't mean that I will definitely buy. But if they allow me and I'm happy with the risk control, I will enter. If they mess it up, I will stay out. All right, I don't have to buy. So on this 3-minute chart, the price still in a declining channel, and it's in that zone. I would prefer it to. I don't know why some people are rushing. I would prefer it. The reason why they are this bounce, those who sold it up there. You remember the 138.2% Fibonacci extension above the target. They sold it there, and they took profit in this zone. Those are the traders coming out now. So we want them to come out and the bull to join them, and we want to see some pattern. But as I'm telling you now, you see the time, 35 minutes past 11 a.m. in London. In New York, it's now 36 minutes past 6 a.m. We are in a gap period. Gap period because at 1 p.m. London time, we have the high impact economy news. So sometimes traders enter the trade during the gap period and they leave it open. They expose themselves, okay, to the high impact economic time, which is from 1 p.m. London time up to the time New York is open. All right, and these high impact news will mess up that trade. Okay. Another thing I need to mention to traders, which is very, very important, all right? Let's see how I'll be talking to you now. 27 minutes, you see, the time is going fast. Now, another thing I need to mention to traders here is that if you are trading, okay, and you are not watching the screen as I'm watching here, okay, you are not trading full time, okay, because there are a lot of traders that are not trading full time, okay. So you are trading part-time, in fact, which means you are not watching the screen constantly, all right? It's a bit risky. It's a bit risky, all right? My recommendation, the best way is to trade when you are free. It's not suitable to all traders, but it's because of the risk control. What I have noticed is that when a day trader is watching the screen, he sit down and trade. He's present. That means he's watching the screen, okay, every minute, but he's there available to trade, to change things, to correct things. He or she can control the risk more. So I put this to traders. If you are trading part-time or you are not trading, you are not watching the screen constantly, but some days you sit down and you have time, I would prefer those traders to trade only when they are free. What I've said here may not be suitable to all traders, okay? Because if you are not watching the screen, you are not 100% available to trade, there is a risk element that you need to control, all right? That's why I'm saying this, okay? But it's not sometimes, especially if you are losing, what's the point of, giving your money away? So if you have free time, when you can sit down and trade, do that. You may trade less, but probably you will be making better decisions or making more money. Well, there are more to this because these type of traders very often are taken out for every trade and they end up losing consistently all the time. But it's up to you. I need to mention this to traders because we are here to tell traders what's going on. Okay, so just mentioning that. Okay, now let's move on. Okay, but if you are a trader, you say, okay, Joe, this is not suitable for me. All right, okay, I don't have any time available at all. I don't have any day free for me to sit down and trade. I'm stuck with it. Another thing I need to mention to traders, okay? We are using tablets now very often to trade, all right? What I have noticed myself, sometimes I look at I have also a tablet, I look on the chart. It's not, though we see everything, I always prefer the desktop, the bigger picture, all right? Try to compare what you see on your tablet to what you see on your desktop. And see whether, is it clear to you? Now, I can show you one demonstration here. You see, this is the chart here, you see? You see this image here, all right? But let's zoom into it. On this chart, we can zoom into it and see it clearly bigger. And once you zoom into it, things become a little bit clearer. This is what I want to tell you now. On the tablet, what I've noticed, yes, the image is there, everything is there, but it's not the same image. All right? Talking about the size and the clarity, I think sometimes I may be wrong. Sometimes traders may lose because they see something on their small screen and they think that is this, is that, but it's not. And they make decisions because of that and they end up losing consistently. So just pointing this out. If I'm wrong, please do not, I'll say this to traders, please do not smash me, all right? But think of it. Okay, iPad may be a little bit better because the screen is a little bit bigger. I'm talking about normal phones that we use. The screen is a little bit smaller, but think of it, okay? Because I know some traders do not use desktop anymore. I like the desktop, okay? I like them, okay? Or at least have a... Okay, I'm not saying to traders to go and buy another gadget now, but pointing those things out, okay? Still waiting to enter this trade. All right, let's move on. So, talking about target. Now, the next question that the trader asked me is how do we set profit? Okay, now, set stop loss. There is a video. I'll put the link in the description section. So, if I record the video, it takes some time. So, I put the description. Sometimes I send it fast to traders. So, if you are the first person to watch it, come back again and check whether I put the link back. Okay, sometimes it takes me a bit of time to put everything there. So if you are the first person to watch it, you don't see the link, don't worry. I'll put it back there at one point. I'll put a link about the video about that I recorded. I draw to your channel, and I'll talk about how I set my stop loss. So that would be very useful to traders to watch. I highly recommend to traders to watch that video to see how I set my stop loss. Generally, a day trader will set, okay, the stop loss, all right, on the entry time frame. Now, some traders may say, Joe, you are crazy. Why do they do that? Okay, so you see here, I'm on a 3-minute time frame. I want to enter the trade here, all right. Generally, don't take it like a sign. Generally, day traders will set their stop loss on the entry time frame because they don't want to use too much stop loss. So price come here, they buy here. They will look at the 3-minute time frame where they are entering the trade. And also, again, for a stop loss, for me, for day trading, I don't like to go over 30 pips. Sometimes I do, depending on the characteristic or the financial instrument that I'm trading. So, like if you are trading Apple stock or Google stock, you use 30 pips. You can. But in your mind, you should know that, okay, this is a volatile financial instrument. You can be kicked out very quickly. But traders do. You can even use less than that. If the signal is clear, everything is nice, the risk is quite low, sometimes you can use even less than that. 10 pips. Sometimes some traders may say, Joel, you can even use 5 pips. Yes, you can sometimes. But in my mind, talking about, I'm not imposing this to traders, all right? Depending on your risk tolerance, you'll find out later on. No one will teach you what is suitable for you, but you will find out later on what works and what doesn't work for you. You will find out, okay? So for me, myself, in my mind, when I'm day trading, I don't want to go over 30 pips, but sometimes I do. Sometimes I use less, okay? So I'm on a 3-minute time frame. Generally, traders want to step stop loss. So you look at it. Suppose I enter here, okay? Suppose, okay? I bought it here. All right? So I say, okay, what's the price level? You see, I say, okay, 106.55. Okay? So if I deduct 30 pips out of that, that's 106.25. So my stop loss should be, my conservative 30 pips stop loss should be at 106.25. Okay, which is below this. You see the price for the support here, which is below this one here. All right, below that. So I can do it. I can say, okay, I place it here, 30 pips. That's what I like to do. I'm talking about myself, okay? Don't take it as a recommendation. This is what I like to do. I say, okay, looking at this 3-minute time frame, this is a support level on the 3-minute time frame. Okay, I can do that. I'll do it. 30 pips, place it here. Some traders with a deep pocket may place their stop loss on the signal time frame. Yes, it makes sense to place stop loss on the signal time frame. But here we are, not all traders can afford it, because maybe you will have to use a bigger stop loss to place it at the best place. So for instance, if I use, suppose, my friend, okay, like we were on a 4-hour chart, okay, suppose I'm using 4-hour chart as my signal time frame, okay, which is a bit lousy. Okay, let's go. Let's change it now to 30-minute chart. Okay. Suppose I'm on a 30-minute time frame, and I want to 30-minute time frame as my signal. Here again, this level is still valid because there is a support here. I want to hide it. So if I buy here, the first and nearest support level below, I want to hide my stop loss. So when we are setting stop loss, we are placing stop loss at the point where trader will be willing to buy. So because we are buying here, price going down, look at the charts, okay, it's going down. So I can place my stop loss here. So I can say, okay, below this candle, you see the tail of this candle, I can say, okay, I don't want to use 30 pips, I'll use less than that. I place it below. You see the tail of this candle here, I'll say I place it here because I'm a day trader. I don't want to use too much stop loss. I'll say, okay, the tail of this candle, some people, but you can see that the price consolidate here. So what we are thinking when we are placing our stop loss, if that's the price start going down, so I bought it here, start going down, where trader will be happy to buy it. So we want to hide our stop loss behind those levels. So this zone, if we come near, some traders will be happy to buy here. So by doing that, if they are buying, if the price come in this zone and they are buying, they are protecting my stop loss. So the stop loss is protecting the trade. So we are looking for points where other traders will be willing to buy if the price is going down. This will protect our bullish trade. The opposite is also true. When we are selling, we are placing our stop loss behind points where trader will be willing to sell. So we are selling, price start going up, you say, what's going on? Now our stop loss is at a point, it's behind a point where they are willing to sell. So prior approach to that level, other traders see that, oh, this is the resistance zone, we should sell. Or bullish traders that are buying see that the price is at the resistance zone, they want to take profit. Again here, price start going down. Okay, so some traders are selling. Okay, going down, they see the support, they are willing to buy. So you can play it different way. You want to place a bullish trade, stop loss, go into the mind of the bearish sellers. So they are if they are selling me down, where will they be willing to take profit? So set their target for them and place your stop loss behind it. So they are selling, their target, there's a support here, they will be willing to take profit. So I place my stop loss behind that level. Right? But always, no one will tell you, maybe it's 25p for you, maybe 40p for you, maybe it's 10p for you. Some trader will shout, say, Joe, don't tell me 30p. Maybe it's 10p for you. By the way, if you are using 10p for stop loss, you must watch the chart, okay? And I need to mention this, very important. If you're using 10 or 15p for stop loss, you must watch the screen. All right? You must watch the screen. Okay? All right, so these are few things we need to pay attention to if you want to set stop loss. All right, but generally for a day trader, he or she will set a stop loss on the entry time frame, paying attention to the key level. But like here, you see here, there's a support here on the 3-minute time frame. It makes sense to hide my stop loss behind the support level. I can also hide, you see here, this one here. Hide it behind this one. But sometimes I do something which I mentioned in that video that I put in the description section, how I set my stop loss like a pro. Suppose I know that my minimum target that I want to set is my reasonable, okay, stop loss is 30 pip, okay. Sometimes I don't use it straight away. So I see like this, I say I know that the best place, the stop loss should be here. But because I'm watching the screen, all right, I may use less, so I place it instead here. I may place it instead here because I'm watching the screen. So in that case, I may move my stop loss. Now, by the way, if anyone says to you that they never move their stop loss, they are lying. Okay? I move my stop loss sometime, okay? Now, so I may place it here, knowing that, okay, this is not the best place for this stop loss. But right now, I don't want to expose myself too much because of the time of the day. It's a bit risky. I will place it below this one, knowing well that the best place should be somewhere here. But because the market environment is not the best time, why should I use my 30 pip now? Okay, so if they kick me out, I will just blink, and then forget about it. All right? So you do not have to use your conservative, okay, minimum stop loss if you are watching the screen and you are monitoring what is happening. All right? For swing traders very often, the most conservative swing traders will place their stop loss on the setup time frame. Because swing trading and position trading requires bigger stop loss. So these traders, for instance, on a weekly chart, these swing traders that want to remain in the trade for 1 week or even more may place their stop loss behind this orange line, depending on their risk tolerance. For me, for swing trading, my conservative target is somewhere between 50 pips and 60 pips. 50 pip and 60 pip. But sometimes I use less than that. Sometimes I use more. Okay? Alright, sometimes I use more. Alright, so once again, it's all about risk control and what you want to achieve. For swing traders, very often they place their stop loss on the certain time frame. So they see the setup and they say, so they will check here so they can place their stop loss below this low here. Alright? But the best place, looking at the market pattern, a risky trader trying to dare to swing trade at this point in a balanced market like this, they will place their stop loss behind the orange line. But you need to be disciplined to do that, because if you are not disciplined, you can wipe out your trading account, okay? Because swing trading requires bigger stop loss, and you want to be disciplined, okay, and know exactly what you do or you are doing, okay? All right? So swing traders typically will set their stop loss on the second time frame. Some swing traders will also set their stop loss on the signal time frame. You can get away, in fact, take it from me, one can set a stop loss on the signal time frame and set a target on the signal time frame. That's it. But sometimes some traders may set their stop loss, especially swing traders, on the set time frame, and also their target on the set time frame, because they want to allow the price to do it. So swing traders, some swing traders who sold it here using a top-down trading method will set their target to the end of the pattern here, or they may set their initial support, they sell it twice or 3 times. You can sell 3 or 4 times. So they sell 3 or 4 times the same financial instrument here. So they will say first profit taking, the median line of the balance market, the median line of the consolidation. So the first trade will be closed. So they take some money out of the market, or they close 2 trades. If they sell it 3 times, they may close 2 at midpoint and let one run all the way here. Okay? You can sell twice sometime, okay? But you must know what you are doing, okay? Sometimes you can sell even 3 times the same financial instrument, but you want to know what you are doing, okay? I have a story, okay, but I don't want, it will make the video too long, where I did that a few years ago, and I was sweating like a donkey, all right? I sell many, in fact, I sold many indices at once. Okay, I won't bother you today, okay, another day, all right? Okay, so for the stop loss and a profit target, we can set it on the signal time frame, all right? But this is the first video, by the way, to answer that question. I will be recording more video, and you can see today I'm talking a bit. I'll record more videos later on, live video, and we will be talking about this, showing different example, different scenario, and it will make sense to traders. So stay tuned, okay? Going back to the 3-minute time frame and see whether there is a chance to enter this trade. Nothing here so far. So let's pause the video after talking to you 47 minutes. Can you believe it? Time going fast. You didn't even feel it, okay? You didn't feel it, so it's okay. All right, so 47 minutes I've been talking to you, all right? How do we set stop loss? We want to have minimum target in our mind, at least conservative target, for day trading and for swing trading, all right? The stop loss for bullish trading, you look below for the first and nearest support level, below. If they are selling it down, where is the first place? They will be willing to come out of the trade. So you are buying, and if they are selling you down, what is the zone where they are likely to, okay, to stop? And for a day trader who want to use, okay, reasonable stop loss, one can set the stop loss on the entry time frame. In that case, I recommend to trade it to watch the screen, okay? So you can see here on the 3-minute, you can see my stop loss below here, or here. Because I'm watching it, I can set it here and watch it and see what they're going to do, all right? Paying attention to the support and the trend line, that's how we set it. But most conservative day traders will set their stop loss on the signal time frame. It makes sense. So when you are using, one thing I need to mention to traders, okay, when you are using the entry time frame to set your stop loss, check the signal time frame. So you may look on the signal time frame and say, no, they're not going to stop there. Because why? So suppose my stop loss, you see here, this is my stop loss. No, this is not my stop loss. So suppose I set my stop loss here, okay? And I come on the signal time frame. I'm using, for instance, 30-minute time frame as for my signal. And as I look at this, I say, no, it doesn't make sense. They can sell me all the way here. Then I'm in my mind, I know that, okay, the best place in 5 for my stop loss is here. Now the next question, can I afford that stop loss? If I can't afford it, I won't do it. Or if I can afford it, but the market environment is not suitable, I won't change it. Because what's the point of using a bigger stop loss when the market environment is not suitable? I will lose big and I'll feel sorry for myself, and I don't want that. Okay? So when you are using the entry time frame to set your stop loss, which means you are checking the first and nearest. So you see here on the 3-minute time frame, I look at the support level below. Suppose I bought it here. I look at the support level and see, okay, on this time frame, this support level is nice. I will be happier to place my stop loss below this the double bottom chart pattern. Okay, if I buy here, okay, is that within my reasonable stop loss? Yes, it's within my 30 pips. Okay, now the time of the day, not very good. All right, can I place it here? All right, okay. Now the next thing I will do, I'll go to this. If I'm using, for instance, 30-minute time frame, I want to check whether that stop loss, both of them, all right, makes sense on a signal time frame. If it does not make sense, I may decide to readjust it if I want to allow the price to move around, or if I cannot afford it, well, I'm stuck with it. I have to control it or even minimize the risk. All right? Okay? But if somebody asks me, tell me simple way, don't say blah, blah, blah. I'll say, go to the signal time frame, set your stop loss, and set your target. Okay? But we can use the entry time frame to set our stop loss. But I do not use my entry time frame to set my stop loss. Sometimes we can do it because if, for instance, I'm entering the trade on a 30-minute time frame, all right, for swing trading, I can set the target also on a 30-minute time frame if I can see, okay, the key resistance level. But generally, my friend, all right, generally, the target, we want to set the target on the signal time frame, primarily on the signal time frame. All right, primarily on the signal time frame. Okay, I'm going back to the 3-minute time frame, and the price out of the channel now. I want to monitor it more. So I'm very patient like a cat. I want it to be cooked and ready, and I don't want to be the first person to jump on it, and then I'll take it from there. Okay, so you want to take the correct step, no rush. You're not going to lose anything. If you miss an opportunity, you didn't lose anything. Okay, so be very patient, all right, because of the time. It's 12 p.m. now. What I will do now, before I post the video, let's go to Forex Factory. All right, check the economy news. Okay, I'll use Chrome. Forex Factory, we want to check the calendar very fast and see what's going on today. All right, so I click on calendar, www.forexfactory.com. This is for new traders, trade forex, or even stock. Check the economy news that can change the dynamics of the market. All right, so today is 18th. Yes, Wednesday the 18th. Okay, by the way, every Wednesday we have crude oil inventory at 10:30 a.m. Eastern time. That's 3:30 p.m. London time. This can affect, okay, though it's orange here, this economy news every Wednesday most of the time. I talk about this at Jotrio channel. There are many videos there that they must watch. Okay, so here it is, okay? All right, so 5:55 is gone. Now the next news, you see the green arrow here. It's Instead, now this is due soon. This is 1 p.m. London time, 8 a.m. Eastern time. That's 1 p.m. London time. Okay, 1 p.m. London time. If you're in Australia, you have to do +10 or +9, depending on where you live in Australia. So +10 or +9. Okay, so yeah, that's the next one. And then we have other high impact economy news at 8:30. So we want to know what is likely to mess up this trade. So I have enough time before that news is due, up to 1 p.m. I have 1 hour. Will I be able to enter that trade? So you see here, up to 8:30, we have a high impact economy news. And so this is why I say the market environment is so important. A valid trading setup, valid signal, but check the market environment, okay? Market environment. Okay, let's pause the video and I will come back to it and see whether there's something here we can do or not. Otherwise, I'll send this one out first and then, okay, we will record another video, another day or so. And gently, okay, we'll talk about it, okay? All right, so let's pause it for the first time and I will come back to it, okay? Place my turquoise vertical line as I always do. Here it is. And the time in London now is 5 minutes past 12 p.m. in New York, 5 minutes past 7 a.m. on the 18th of November, live recording, talking about, okay, how to place a stop loss and how to set a price target, okay, when one is day trading or swing trading. Speak to you soon. Pausing the video for the first time. Okay, traders, there is a bit of progression here. All right, going on. So what I'm going to do, I'm going to place a limit order at least here. To buy here, right here, it's quite high. So, yep, I'll leave it there at 10676. This order is not yet filled. To buy color into green. That's it. The limit order to buy the euro at 10676 because you see at least it came out of the channel. It's still a risky trade. I place my order there to buy, okay? And if the order is filled, I will come here and place my stop loss because it's quite high. My 30 pips will bring me somewhere below here. All right, it's quite high, quite high. The best scenario that I would prefer is the price to pull back. If you pull back, I may have to adjust. If you pull back, I would prefer it to pull back instead before going like this, okay? That would be better, okay? But, so, I'll leave it there for now. If they decided to push it straight away up because, all right, we are near that zone of, because my concern is to buy in a zone of 50%. You see the zone, 50% and a 61.8% zone. All right, that's why I don't want to, I'm placing my order here to buy, okay? But sometimes the price may just go boom, 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 and it's gone, okay? So it's risky trade I'm playing with, and it can be very rewarding, and I will control the risk carefully, all right? Those trades can be nice if you control it gently, and it works beautifully. It's nice, okay? So that's why I'm placing it there now. So you may say to me, Joe, why don't you just buy now? I don't want to buy like that. I want to use a limit order, okay? There are resistance here. You see the resistance here. So if you break above it, it means that traders are willing to buy it, okay? They are buying. So I'm not the first person to buy. And then I'll come back and maybe place my stop loss just below this low here, okay? Somewhere in that zone, okay? So the order is there now. I just want to show you that because it's happening now. So I will move my thing. So just now I paused the video. Now I'm back again because of the activity that are taking place here. So my limit order at 10676 is there. Okay, speak to you soon. Okay, traders, what's happening here? Okay, it's pulling back nicely. As you can see here, it's pulling back. We really found a support on the edge of the channel. We will wait and see, okay, whether they will continue to sell it down. All right, and we will see. All right, so just waiting to enter this trade. This is a good one because I don't have. I will remove this limit order now because it's pulled back. There's a better place to buy now. Okay, so what I'm going to do, I'll replace another. I'll put another limit order instead here. Okay, here, that better place. Okay, that's a nice pullback, beautiful. So there it is. So if you break below this low, I will have to adjust again my limit order, okay, to place it in a better place. All right, we'll see what the price will do. So far it's pulling back. All right, we'll see. Okay, going to leave a line here. This you see, you see this candle here, the shadow on the top. Even if it come all the way down there, it's not too bad. Okay, and then I will see whether I will change direction, and then we'll take it from there. Okay, so waiting to enter this trade. If they give me a chance to enter it, okay, we will enter it. Okay, we have said what we need to talk about, how we play stop loss, and how we set target. That's the point of this video. But this is about now waiting to enter this trade. Okay, so let's pause it again, and then I will come back to it. So it's not far here. Okay, pausing the video again for the third time. Okay, traders, orders filled at 10666. All right, so I'm now in this trade. Finally, I'm now in this trade. It's a good place. You can see that it pulled back nicely, trying to retest the edge of the declining channel on a 3-minute time frame, and then it's changing direction. So I'm not the first person to buy it, so we will see. Okay, let's now place our stop loss, okay, on these live charts. So as I explained to you, my talking about my trading style, my reasonable stop loss for day trading is 30 pips. So I enter at 10666. Okay, that brings me at 36, 10636. My stop loss is somewhere here where I place my cursor now. Yes, it's not bad place. Okay. All right, let's draw it. Okay. 10636. That's the 30p stop loss. So I want you to stay focused, please. Okay. Okay, place the red line there. I'll remove this red line. So in normal condition, if I want to use my 30 pip, my stop loss should be at 10636. All right, but because of the time of the day, soon there will be some high impact economy news. I'm reluctant to use my normal 30 pip. So in order to control the risk that I'm exposing my trading account to, I will use less than 30 pip. Okay, I'm looking at this. You see how the price changes direction here. It's a support zone. So I'm thinking of where, if they are selling me down, traders will be willing, okay, to buy again. So traders that are selling, if they are selling, for instance, I'm using the entry time frame to set my stop loss in this case. All right, so if they are selling me down on this 3-minute time frame, which areas, okay, the bearish trader will be willing to take profit. So with that information, I can hide my stop loss behind those areas. Okay, so there's one here. See here, changing direction here. Okay, but I don't want to use that. Okay, let's bring it here. How many? 40. 26 pip, not much. Okay. 15, 21 pips. Okay, let's use 21 pips. It's not big difference. All right, let's use 21 pips. Leave it at 106. Okay, 45. Okay, 106.45. Okay. That's it. This is my stop loss. I'll color it into pink. That's my stop loss. So remember, I'm allowed to up to 30 pip, but I don't want to use 30 pip because of the current market environment. This is the normal 30 pip level. I'm using 21 pip for this trade. I enter the trade at 106.66. Okay, stop loss at 106.45. 21 pip reasonable stop loss. The reason why I place it here, you can see that there's this you see this support here, price changing direction here. I'm hiding it just below that support level. All right, normally I should bring it down below here, okay, in normal condition, a little bit at least below this low here. So talking about how we set our stop loss, we can set our stop loss on the entry time frame if we are watching the screen. Very, very important. All right, but normally, generally speaking, trader will set their stop loss on the signal time frame and also set their target on the signal time frame. All right, so here it is, one example of setting stop loss on the entry time frame, paying attention to the support level on the entry time frame when we are buying, and paying attention to the resistance level when we are selling. So I would, as I said to you, we will be recording more video, live video, and we will be talking about all these things, okay, step by step, okay? All right. I want to mention to traders, our channels. I'm posting video at 24 Forex Traders channel, videos at 24 Stock Traders channel. All right, so stay tuned, Joe Trio channel. So, okay, I'll put the link also in the description section for you guys, okay? So I'm now in this trade, beautiful, patiently, after more than 1 hour we were talking, so an hour, 7 minutes now. Finally, I enter the trade. By the time in London, it's 39 minutes past 12 p.m. In New York, 39 minutes past 7 on the 18th of November 2015. We are in a gap period. Soon there will be some high impact economy news, as I show you already at forexfactory.com. For those reasons, my friend, I've used 21 pips. Okay, if they kick me out, I'll just blink, 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 and forget it. Okay, all right. So that's it. So now talking about for this trade, for instance, we want to set stop. We want to set price target. Where do I want to take profit? Okay, this is what we talked about before. For me, all right, I have in my mind now. I'm using 21 pips. If I get also 30 pip. So you know what I said to you, reasonably I like to use stop loss, 30 pip. The same thing for day trading. I'm happy my minimum profit target when I'm day trading is also 30 pips. So this is about me, all right? It doesn't have to apply to you. It may be different from one trader to another, okay? So out of this trade, in my mind, my minimum profit that I want to take is 30 pip. All right, 30 pip. All right, but let's go to the now for this trade. What I have done, you can see that on the weekly chart. So the price is at the support level, as I showed you at the beginning of this video. I don't want the video to be too long. You remember the green line. We have a balanced market, the price heading down, but it's at the support level, which is the low, near the low of this candle here on the weekly chart. And then on the 4-hour chart, we see a triangle. The triangle is telling us that anything is possible. Talking about Elliott wave trading. All right, it's a triangle here. Price going down, forming a triangle. Well, what's going on? Okay. Now, but this is a correction taking place. So we see a triangle at the end of a bearish move. It's a warning that anything is possible. Price bounced out. It went up big time, okay? Now somebody bought it. They are buying now here, okay? In this near that support level that I show 106.70. okay, somewhere up here. So now, because of what I've seen on the 4-hour chart, as I showed you before, that's my trading setup. Price out of a triangle and pulling back, okay? So now, from the 4-hour chart, I just went straight away to the 3-minute time frame. Remember, for a top-down trading method, we must use minimum 2 time frame. We can use 3 time frame, we can use 4 time frame, even more. Talking about the entry, we can zoom into it. I talked about it before, and there is a video, okay, about the top-down trading method, which I will put also in the description section, okay? All right, so from the 4-hour chart, I went to the 3-minute time frame. As I came to the 3-minute time frame, I don't want to violate the market pattern on the 3-minute time frame. The market pattern on the 3-minute time frame is a declining channel. So I was patient. But I was going up. I said, well, will they just go bring it up without pullback? So I set my initial limit order above this resistance here. But price finally pulled back, which was good. Well, then I reset my limit order here. Now this order is now filled. My conservative stop loss, 30 pip, but because of the time of the day, talking about the market environment, okay, the setup may be good, the signal may be gorgeous, all right, and the entry may be, okay, low risk, but the market environment is very important. The market environment is not very suitable. But as a stubborn trader today, all right, so to speak, I decided to enter the trade. For those reasons, instead of using 30 pip, I'm using 21 pip. And I keep my eyes on it. If they kick me out, I will just blink, okay? All right, and move on, all right? But we will see. As always, I like to get paid. And it will be nice to get paid again, all right, in this trade, all right? So this is what's going on here. Okay, so let's put the vertical line here. Where are we? Okay, I'm on the 3-minute time frame. My stop loss is the pink line. Don't forget, my entry is the green line here. I will remove some line here. Let's remove some of the line that we do not need anymore because we finished with them now. Okay, I leave this one here. This is the target for the triangle. I leave this one here, and I leave this one 138.2%. Fibonacci extension level. I'll leave it also here. Now, talking about how I set profit target. Moment, please. Let's remove this also. Now, I'm going to go to the 4-hour chart. Okay, 4-hour chart, because so I just entered this trade now. I'm using the 4-hour chart. I want to look at the 4-hour chart because you see this candle here. That's where we bought it somewhere here, okay? All right? Right here. This is where we bought it. The green line below here. The top one is not, okay? So, because of the first reaction today, you see that the price went up all the way here. And then they sold it down, okay? So if I set my target exactly there, how much pip is that? So, all right? How much pip will it be around that zone? Let's go back again to the 3-minute time frame. Hopefully we see that line. Yeah, that's the dark line there. That's where the price went up to that zone, okay? It went up all the way to 106 in the zone of 106.90. All right, it's not much, okay? Because if I'm expecting 30 pip out of this trade, they should bring it up to 106.96 above this zone. That's my conservative minimum, okay, profit target out of my day trade. Talking about my trading style, okay? So I would prefer for this trade 30 pips. Yeah, should go. So the conservative target, if we are setting a conservative target, should be near this zone because that's the resistance here. You see the resistance here. Also a resistance on the 4-hour time frame. So price going up. First a nearer resistance level from that the point where we bought it on the 4-hour chart. You see the people sold it here before. It's near the level of 10690, which is okay less than 30 pip for where I enter the trade. All right, so this is the minimum target. Okay, all right, minimum target 10693, the first and nearer resistance level. Okay, that's it. But because normally I will expect more than that, the price has to go above that level before I can achieve my 30 pip. But for now, I will set it at 10693. Okay, that's exactly that level, 10693. I will not place a limit order there to close the trade straight away. All right. The reason is we can use a limit order to close a trade. We can use a limit order to enter the trade. So if you are not watching the screen, you are somebody who is not watching the screen, okay, all the time, you can set a limit order to close the trade. You are in the trade, now you set a limit order to close the trade. But if you place a limit order to enter a trade and the limit order is not filled, remember to remove it. Because if you forget, you'll be surprised. You go into your account, you see some trade and you say, who placed it, who placed it? And you'll be backing on your broker, and your broker will tell you that your limit order has been filled. So like you see now, if you place the limit order and you don't like it anymore, or it's not filled straight away, remove it straight away. Otherwise, if you forget, and the price reaches that level at one point another day, the order will be filled. Very, very important. If you don't need the limit order, remove it quickly before you forget. Okay, very, very important. Otherwise, one day you see all this trade, you wonder who placed them, where they coming from, and it's just a limit order that were left, okay, somewhere. Okay. 1 second, please, traders. All right, 1 second, please. Okay, so this is my minimum target, 10693. Okay, minimum target. Okay, but I will not place a limit order to close it. So I'll keep my eyes on it. I'll have to close the trade myself. All right, but I can set another greedy limit order somewhere up here. You see these two candles, the closing price and the opening price of these two candles. In fact, I will do it now. I'll color in orange. It's a limit order to close the trade, not to, okay, to close the trade. All right, hold on, please. I'm still here, guys. Okay, limit orders to close the trade at 10707. Okay, it makes sense. Okay, so if they go above the minimum target, this is the minimum profit target. If one wants to set a target, that's the first and near resistance level, 10693. Okay, if you are not watching the screen, you can set it with limit order. Now, I don't want to set it with a limit order. I place my limit order above here. Because I'm here, I'm watching it. In case the price run faster, this my trade will be closed straight away here. Okay, that's it. All right, traders. So far, what's happening here on the 3-minute frame? We enter the trade at 10666, and now the price went up a bit and then pulled back again. What's going on? Okay, so let's pause the video and then we'll come back to it, and I will show you what's happening here. So you can see what's happening. I will place the vertical line here. The time in London is 51 minutes past 12 p.m. Okay, and I want to go to the Forex factory. As I show you at 1 p.m., which is 8 a.m. London time, we are expecting a FOMC member, Dudley, to speak. All right, this is why the market is behaving ups and down. So in a few minutes, 9 minutes exactly, this economy news, Mr. Dudley will start speaking, and the market will start paying attention to that. Okay. All right. So you see the market environment and what we are talking about. So let's pause the video again, and then we'll come back to it very soon. Speak to you soon. Okay, traders, just to show you what's happening here, we have paused the video here. As you can see, the price now oscillating around my entry point at 10666. This is normal during the gap period, so the price out of the declining channel now is consolidating. We are going to draw the consolidation that is taking place, okay, on this 3-minute time frame. Okay, so nothing so far to bark about, so to speak. So this is what's going on here. We will see whether we're going to have a breakout and a continuation. Okay, if the breakouts, okay, occurs here, we will use okay, the height of this consolidation projected to the upside in the direction of the price to know where is the likely, okay, reversal point. Okay, keep projecting it if the price continues to go up. If it goes down, we'll do exactly the same thing and project it down. Okay, project it down to know the possible oversold zone. Okay, so this is what's going on now, okay, on this 3-minute time frame. Let's pause the video again, okay, and to avoid that the video is too long. It's already long, so we don't want it to be too long. Okay, so speak to you soon. Okay, traders, this is what's happening here. You can see that not much is going on so far. This is because of the important economy news that are due. Okay, so we pause the video here. You can see that the price just went down. You see, it went down, and this is my stop loss here. This is my stop loss here. All right, so just reflecting, okay, the risk that I'm taking here to be in this trade. All right, so that's it. Looking at the calendar here, we have, let me refresh the Forex Factory. Here we are. So we have some few, so it's Wednesday today, the 18th of, the next economy news is at 10:30 a.m. Eastern Time. That's 15:30 p.m. London time. The crude oil inventory. This is a very important economy news that is often released on Wednesdays. All right. So this is what the market is waiting for. We have already the building permits. Okay, here. So as they have forecast, that was exactly the figure. So the actual figure is equal to the forecast figure, 1.15. Okay, so nothing has changed for the building permits, which is a high impact economy news. And we have also the housing starts, a bit bearish for the dollar. So these are the economy news that are released, but the most important economy news today is the crude oil inventory, and this one here, the red envelope here, the FOMC meeting minutes. This is due at 2 p.m. all right, Eastern time. That's 7 p.m. London time. This economy news usually wipe out trading account for day traders because it's during the gap period after London is closed. And traders sometimes they miss this economy news, the FOMC meeting minute, very important economy news, and you will see a quite volatile candlestick bar at 7 p.m. London time, 2 p.m. Eastern time. So be aware of this economy news on the 18th of November. If okay, I post this video after the 18th of November, you are watching this video, check out what has happened that day, okay, to your trading account, whether you have missed it or not. Okay, on the 18th of November, that's it. Here it is. Okay, so paying attention to the economy news, and most importantly controlling, okay, the risk. So I'm still in this trade, all right, but we have been talking now for nearly an hour 30 minutes. Okay, I'll pause it again, and later on when I come back we wrap it up. Okay, so the most important thing is the tips and tricks about how to set a stop loss and how to set a profit target. That's the most important thing in this video, okay? All right, for day trading and also for swing trading. Let's pause it again, and I'll come back again and see show you what's happening here, and then from there I will just leave it up, okay? Because I'm risking 21 pip in this trade, okay? Whatever, it's okay, quite risky trade because it's open during the gap period, okay? So speak to you soon. All right. The time in London is 22 minutes past 2 p.m. In exactly 8 minutes, okay, New York will be open. In New York, 22 minutes past 9 a.m. Speak to you soon. Okay, traders, as you can see, the market is waiting for the crude oil inventory at 3:30 p.m. London time. That's 10:30 a.m. Eastern time, and as you can see, the price just oscillating, and there is no reason to hang around and wait until the news is released. For the purpose of this video, I will stop here. All right, the most important thing has been said, and I hope you have learned something from it and will put into use to make excellent decision relating to how to set a stop loss and how to set a profit target. End of this video, and if you have any question, put in the comment section. You have any suggestion, put in the comment section, and in due course we'll record another video, okay, to answer this question. We wish you the very best in your training, and until the next time, enjoy yourself and be very happy. This video has been recorded to answer a specific question asked by a TSTW trader concerning okay, stop loss and profit targets. Happy trading to you all, and speak to you soon.